Okay, and we are live. So thank you everyone for joining us this afternoon. My name is Lisa Awkward. I'm the Director of Programming for the Connected Commerce Council. And we are so excited that you're joining us for our webinar, How to Make Sure Your SBA Loan is Forgiven. Today we have our speaker who's the President and CEO of CFO Services, Manny Cosme. And he has worked with small businesses for, wow, I think more than 15 years. Yeah.
We'll just say that.
I didn't want to say that. And he is gracious enough to join us and help us learn what's the tips and tools to help us make sure that our SBA loan is forgiven. It's a hot topic right now for a lot of us in the small business world. So Manny, thank you so much for being here, and I'm going to turn it over to you.
All right. Well, thank you, Lisa and Connected Commerce Council for having me on here today. Yes, this is a great topic, very timely, of course, because hopefully you all have received your PPP money by now. And maybe some of the other, you've started to take advantage, or at least you're thinking about taking advantage of some of the other options available to you. So that's what we're going to talk about today, is how to primarily make sure that that loan is forgiven. And then I'm also going to touch on a couple of other topics to make sure that you're taking full advantage of everything that's available to you right now. I'm going to go ahead and make sure this is working. There we go. Okay. So here's our agenda. So what we're going to do is I'm going to do a little bit of intro. I'm going to do content, and then I'm going to do open Q&A at the end. So I do ask that if you have questions, that you hold them off until the end. Please put them into the Q&A box, which you should see, I don't know, maybe on the top of your screen or bottom of your screen. Somewhere on your screen, you should see a Q&A box. So just put the question in there. And then at the end, once I get through the content, then we'll tackle the questions that you have. I do have a lot of content, so I do want to make sure we get through all this, because it is all extremely important to make sure that you can take advantage of everything at your disposal right now. So just to recap, we have a lot of sources of funding that are available to you right now. So as a recap, there are 8 main things I'm going to really touch on today. So we're going to talk about the Paycheck Protection Program, of course. I'm going to talk about the SBA's Economic Injury Disaster Loan. We'll talk about that. I'll talk about the Main Street Lending Program, which is sort of the new kid on the block, if you will. It's actually not quite that new. It just hasn't really been talked about until recently. We'll talk about the Employee Retention Credit, which you may be eligible for. We'll talk about the Federal Sick and Family Leave and how you can take advantage of that. The Payroll Tax Deferral, which is available to you. Then we'll touch a little bit about some other funding sources that you may not have thought about or haven't really come to top of mind, because really everyone's been talking about the PPP. And then we'll wrap it up with a discussion around management and how to manage your finances and all these pieces during this period of time. All right. So the good news is that hopefully by now you have gotten the money, that PPP loan has come through. If you've applied for the SBA disaster loan, hopefully that's come through. And so now you have some funds and you're able to reopen your business. If you had to close it down, you reopen your doors. Your employees are getting back to work. You're starting to produce again. So hopefully that is the good news. The bad news, however, is that you're not done. So you got the money, but now there's some administration that you have to work through. You're going to have to track some of this money. There's some paperwork. You're going to have to file and whatnot. So you're not quite done yet. So that's what we're going to talk about on this webinar. So our focus is on next steps. So now that you got the money, how are you going to account for it? All those funds that you got. If you got the PPP, how are you going to maximize that forgiveness to make sure that you don't owe any money back to the government, or to the bank, the lender, I should say? How are you going to claim those tax credits that you're eligible for? How are you going to comfortably repay the loans that you've gotten? So if you have to repay the PPP, or if you got that SBA loan or the Main Street loan, that quote unquote new one, how are you going to comfortably repay it? And then ultimately, how are you going to use the money that you got and the resources at your disposal, which include employees, by the way, how are you going to use that wisely? Okay, so just a really quick intro about me. My name is Manny Cosme. As Lisa said, I'm the founder and CEO of CFO Services Group. We are an accounting firm that's focused on bookkeeping and strategy for small businesses and small nonprofits that are growing, okay? I'm also a serial entrepreneur, so I will say that I have been doing this for over 20 years, so that's the magic number. I've been doing this a really long time, and I've actually owned several businesses during my time, CFO Services Group, of course, being one of them, and the only one I own right now, thankfully, because owning business can be a lot. So I say all that to say that I'm actually in your shoes right now, so I understand exactly where you're at. I probably can anticipate the questions that you have because I've had the same questions, and all of our clients have probably had the same questions. And I myself have PPP money, and I've taken advantage of some of these tax credits, so I know exactly where you're at. And because of that, I'll probably be able to help you kind of navigate your way through this period and through all this, okay? So a couple of quick disclaimers. Disclaimer A, I am keeping this high level, so I'm keeping it focused on quote unquote micro businesses, which, the SBA defines a small business as under 500 employees. I like to go smaller and say if you have under 100 employees, then this is for you, or under 5 million in revenue, give or take. So I'm keeping it, if you are bigger than that, definitely let me know, and I can let you know about some of the other nuances that may apply to you. But I think this is going to tap most of our audience here today. And then disclaimer B is that this information is unfortunately still changing quite frequently. So if you were kind of keeping up with this, as the PPP was rolling out, almost every 24 hours, it seems like there was updated guidance from Treasury on how to apply for the PPP. Well, now that we're moving past that phase and into the I'm going to use my money and ask for forgiveness phase, well, guess what? There's continuous guidance that's starting to come out around that. So there are some questions that have been posed now that Treasury has said, well, we don't know the answer to that yet. We'll get back to you on that, okay? So there are still unfortunately, there's some open questions around how to even ask for the forgiveness, okay? But I will do my best to answer whatever questions you have based on the latest guidance as of today, okay? So with that, let's go ahead and jump into the information here. Okay, so the first one we're going to talk about is the Paycheck Protection Program, which everyone should hopefully be familiar with. But just in case you're not, let's talk about what this was. So the whole purpose of the PPP was to do three things. It was to keep your employees working and producing, to keep your business generating revenue. So what the government didn't want was a bunch of people collecting unemployment and not being productive, right? Because that was the alternative. All the businesses close their doors, and then employees are forced to basically stay at home, collect unemployment, and wait for this whole thing to end. Well, we didn't want that to happen, because if that happened, the entire economy would come to a grinding halt. So Congress stepped in and said, well, instead of paying unemployment, let's give businesses the money to hire their employees again and keep them working. And by doing that, they can hopefully figure out how to keep generating revenue and keep the economy moving so that we don't just stall out here. So that was the whole purpose of the PPP, okay? And it's really important to understand that purpose when we talk about how to get forgiven, because it all makes sense once you realize what the whole point was of all this, okay? So there are three criteria that you have to meet in order to get forgiven for the PPP. Okay, so criteria number one is the time period. Number two is around authorized spending. And number three is around your employee count. All right, so let's dive into each one of these criteria to really understand them. So the first criteria is around your time period. So from the day that you start receiving your funds, so that first day that money gets deposited into your bank account, a clock will start ticking, okay? And that clock runs for the next 8 weeks or 56 days, okay? So during the next 8 weeks or 56 days, you have to meet criterias number 2 and number 3, which is around authorized spending and employee count. That count starts, again, the day that you receive the funds. There's not going to be a grace period between the day you receive the funds and the time you have to start all this other stuff, okay? So what I'm telling people to do is once you get approved for the loan, you're going to get a promissory note to sign. Once you sign that loan, that's the actual loan. Once you sign that paperwork, the bank by law has to fund your bank account within 10 days, okay? So within 10 days of you signing that loan, you're gonna get the money deposited into your bank account. Keep checking your bank account every day to know exactly when those funds hit so that you can start your timer basically, okay? And you may want to mark your calendar there just to keep in mind during this time period, I have to meet these next 2 criteria, okay? So let's go ahead and jump into the next 2 criteria. So criteria number 2 is around spending, okay? Now, you can only spend the money on payroll or kind of other authorized expenses, okay? And then that's considered authorized spending. Again, keep in mind that the purpose of the PPP was to keep employees working and producing revenue. So you'll understand that when you see the criteria here, okay? So let's talk about payroll spending. So as I said, there's 2 here, right? Payroll and other. So let's talk about payroll spending. So what can you spend money on? So here's what's authorized to spend money on. Gross wages, of course, you're going to pay your employees, okay? Owner compensation, which is really important, and I will get to that in the next slide. I'll tell you exactly what that means, okay? So gross wages, owner compensation, severance, if you have to lay someone off during this period of time and you pay them a severance, that counts. Any paid time off you give to employees, that's not the federal sick or family leave, which of course we'll get to later. Any state and local taxes that you pay as part of that payroll, okay? Any employer paid health benefits and any employer paid retirement benefits, okay? So what is not authorized then? Any federal taxes, so FICA and FUTA basically, and any federal sick and family leave that you pay, which again, we'll talk about later. And of course, then anything else that's not on this list, that is not authorized as part of the spend that you make to employees. Now, keep in mind, if you remember when you applied for the PPP, you could only claim payroll if any employee got paid more than $100,000, you could only include $100,000 of their salary as part of that calculation. Same rules apply here. Okay, exactly what went into the PPP is what's going to come out of the PPP. You can't pay gross wages in excess of $100,000, of course, annualized salary, right? So that's 8,333 per month, $8,333 per month. That's like the cap, okay, per employee. So keep that in mind. All right, so let's talk about owner compensation, that second bullet. So what does it mean for owner compensation? So if you are a corporation, you cannot take this because as a corporation, you're required to pay yourself through payroll. So remember that. But if you're an LLC or a sole proprietorship or a partnership, then you can pay yourself with distributions. That's okay. So you can take some of the PPP and use that as part of your distribution. So here's how you're going to figure out what portion of this money is used for that. You're going to take your 2019 net profit, which shows up on your Schedule C, line 31. Okay, again, only up to the first $100,000 of that if you had more than 100,000. Okay, you're going to divide that by 12 to get your average monthly profit. And you can claim up to 2 months of that amount as part of the PPP. So basically, that the first 2 months of your profit from last year are basically automatically forgiven if you kind of want to think about it that way, okay? They're automatically forgiven. That leaves the rest of it that you have to keep spending on the other things, okay? So that's how you take care of owner compensation. So the next thing you have to spend money on is this other spending. So here's what's authorized there. Any interest you pay on a mortgage, okay? Any office rent you pay, utilities, which is electricity, gas, water, telephone, and internet, and transportation. Okay, what's not authorized is basically everything else. Okay, that includes 1099 contractors, really, really, really important. If you use 1099 contractors, you cannot use this money on them, okay? By the way, they can go get their own PPP. That's why. All right. So contractors, raw materials, software, liability insurance. Okay. These other expenses that we typically think of as overhead, this does not apply. Okay. Only those authorized expenses you can use it for. Also, on top of that, you have to meet a certain percentage criteria. You have to spend at least 75% of the money on payroll or your owner compensation, okay? Again, think back to the reason why we got the PPP. It was to keep people employed. So the government wants you to be spending the money on your payroll. So you have to spend at least 75% of it on that payroll so we keep people employed. The rest of it, the other 25%, you can spend on that other stuff, okay? So keep that in mind as we're spending money. Okay. Now, the third criteria is around employee count, all right? So again, we want to keep people employed, right? That's the whole point. So the government is saying that you cannot have reduced your head count during this period of time. In other words, not only do we need to keep paying people, but we need to keep paying the same number of people. We want the same people employed, not unemployed, okay? So you cannot have your headcount be reduced during this period of time, okay? Nor can you reduce wages. So that means you can't take full-time people and bring them to part-time, or you can't start cutting wages more than 25%. So if someone was making $100,000 before this, they can't suddenly make $50,000, okay? You can bring them down a little bit, but you have to keep salaries pretty much where they were before to basically make everything whole again, okay? Now, if you have laid off people, because of course it's taken some time to get this money, so if you had to lay off people, you do have until June 30th to rehire everyone, okay? And if you have reduced wages, you again do have until June 30th to fix all that, okay? All right. And again, if you have employees paid over $100,000, then that wage reduction doesn't start to the first 100,000. If you're in that situation, let me know. I can explain a little bit more. So here's an example of what this would look like, okay? So let's say on April 1st, you laid off 2 full-time employees, okay? And you reduced the wages because, hey, we didn't know, right? I had to close my restaurant. I didn't know what was going to happen. The PPP money wasn't coming through. So I got nervous and said, you know what? I just need to lay everyone off. So April 1st, I laid people off, okay? I applied for the PPP, and luckily on May 1st, I got the money, okay? So the clock starts ticking from May 1st, because that's when I got my first distribution, okay? On June 26th, because it took me a little bit of time to rehire people, but on June 26th, I was able to rehire both the full-time employees and brought my wages back to normal. So that means that on July 1st, after I've exhausted that 8-week period of time, okay, I can claim the full forgiveness because I did cure that deficiency, okay? Because we get it. It may take you a little bit of time to get people back on the payroll, increase wages, et cetera, okay? So you do get a little bit of grace period there, but you do have to bring everyone back, all right? Now, I will caution you, that's what that little box is down there. Be very careful about those percentages. The 75% payroll, you have to spend at least 75% of the money on payroll. So if you wait too long, you run the risk of not being able to spend enough on payroll. Because think about it, if in reality you did wait until June 26th to rehire people, well, what have you been spending the money on? You haven't been able to spend it on payroll, right? So you do want to be able to bring people back as soon as possible. Ideally, before you even get the money, you're bringing people back on, okay? And that again was sort of the goal that the government was aiming for, was to get people employed as soon as possible. So if you know the money's coming and you have laid off people, I would highly recommend that you jump on that and start hiring people now, okay, in anticipation of that, all right? By the way, the money that is going to be forgiven, we've been getting this question a lot, will not be taxed. So it's not going to be considered taxable income. Normally, if you get a loan forgiven, a debt forgiven, it is considered taxable income. However, in this case, you're not going to get taxed on that. Now, the caveat to that is that anything you spend the money on will not be able, you won't be able to deduct on your tax return either, because otherwise you'd be double dipping, right? So if I spend all my money on payroll expenses, I can't turn around and then say, well, all the salary I just spent your government money on, I'm also going to take as a tax deduction. Okay, you can't do that because you're basically double dipping at that point. So the government said, no, you can't do that, but we're also not going to tax it. So yay for that. So that's good. Okay. So what happens if I don't meet these criteria? Okay, let's talk about that scenario. So there's basically kind of five scenarios that could happen. So what if I didn't spend all of the money in 8 weeks? Because you're going to get the money and you need to spend it in 8 weeks. Well, if you have anything left over after the 8 weeks, then you do have to repay the unspent portion of the funds. Okay, so you're going to have to repay that. Okay, now what if I spent the money on unauthorized expenses? So I spent the money on things that were not in that other list, basically, right? Well, you're going to have to repay that amount, okay, back to the lender. Okay, what if I didn't meet the ratios, 75% and 25% payroll, okay? Then you do have to repay the amount you missed the ratio by, okay? What if I didn't rehire by June 30th? You're going to have to pay back a prorated amount, and there's a calculator that you can use that will tell you exactly how much it is that you need to repay. Same thing if you didn't restore wages by June 30th, there's a calculator you would use to figure out how much you're going to have to repay. Now, if you do have to repay, this is what it's going to look like. You're going to have an interest rate of 1%, okay, so extremely low interest rate, and you're going to pay it over a 2-year period of time. However, your first payment you're not going to make for the first 6 to 12 months, and there's no prepayment fee. So if you end up having to pay something back, you can just repay it back right away, and everything's good. No harm, no foul there. Okay, so you can go ahead and pay that back. Now, as you can tell, there's probably going to be a lot of bookkeeping required for all this, because you have to meet not only the time criteria, but that spend criteria and the employee count. So there's a lot of like bookkeeping stuff going on here, okay? So it's very, very important that you keep good records on all the money that you're spending, okay? And again, of course, we recommend using something like QuickBooks to make sure that you're keeping good records on all of this, okay? So I do have some good bookkeeping tips. There's kind of 2 general ways that we're recommending that you do this. So the first one, if you want kind of the less sophisticated method, if you will, is to use a separate PPP bank account. So we're seeing that some people are just opening up a second bank account, or if maybe you've had a savings account kind of sitting there parked for a while and haven't really used it, you can just put that money directly into that second account. And then as you spend it on these authorized expenses, you can just move the money from your second checking account to your main operating account, okay? That's an easy way to kind of really track the money and see how much money you have left over. It's not as sophisticated. There's a lot of transfers back and forth. You may have to open up a new bank account, blah, 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 blah. So, you know, it may not be the best method, but certainly is a method that you can use. The second way, which may be better, is to use QuickBooks. And what we would do is use a class tracking feature in QuickBooks, or set up a PPP on the chart of accounts. And then on paper, we would just transfer the money on paper if you use the money. The reason why that one is better is because there's a couple of other things that you may be taking advantage of that we're also going to have to track. And so keeping it all in QuickBooks is going to make it easier to amass all of this stuff together in one place, which you'll see as I get down the presentation, okay? Now, you probably will have to enlist the help of a bookkeeper to help you do QuickBooks, but you may also have to have a bookkeeper help you with the separate PPP loan as well, okay? The key is that you probably want someone helping you tracking all this stuff, transferring the money back and forth and whatnot, just to make sure that everything is on the up and up. All right, so that's the PPP, and that's how you're going to ultimately get the forgiveness of that loan. So let's go ahead and move on to the economic injury disaster loan. Okay, so this one, if you remember, was the loan that was directly from the SBA, that if you had an injury, an economic injury due to COVID-19, then you could apply through the SBA for a direct loan. Okay, so if you were lucky enough to get this loan, which looks like, by the way, as of this morning, the SBA sent out a bunch of emails saying that they're finally starting to process these things again. So hopefully more people will be getting these. But if you did get an SBA disaster loan, keep in mind that's not the PPP. This is something different. Okay, this is an actual loan that you will have to repay. Okay, so you have to repay this. The interest rate is going to be 3.75% for businesses, or 2.75% for nonprofits. You're going to pay that over a 30-year period of time. Okay, so I call this the mortgage of business loans, basically 3.75% over 30 years. Okay, your first payment is not going to be until January of 2021, so you have a little bit of a grace period there. Now, if you got the advance, if you remember, there was an advance that you could apply for. It was up to $1,000 per employee. That's how it ended up shaking out. Okay. If you got that advance, you remember it's an advance of a loan. So it's either an advance of the SBA loan or the PPP. So if all you've gotten was the PPP, that is an advance of the PPP. So same rules apply. You're just going to add that money to the rest of the PPP money when you get it and spend it. Okay. And spend it according to the rules. If you got the money and ultimately get the disaster loan, it's just part of that disaster loan and you're going to repay it as normal. Okay. It's not free money. People have been saying it's free money, or that notion kind of came around because it rolls into the PPP. And therefore, if you meet the criteria, the whole thing, the PPP is forgiven, but it's just an advance of those funds. Okay. So remember that if you get the SBA loan, the SBA EIDL, and the PPP, you can take both of them. Okay. So you can take both loans, but you have to be very clear on what you spend the money on. Remember, the PPP has all those criteria. It has that red tape around it. You can only use it for payroll, rent, utilities, and transportation. Okay, the EIDL can be used for everything else. There are no real strings around that. Okay, so what you want to do is be really clear about what you're spending the money on if you get both. You don't want to spend EIDL money on PPP stuff, basically. Okay, you want to be really clear about that. So again, bookkeeping, I hate to say it, but you need good bookkeeping around that, right? So again, using QuickBooks or opening a separate bank account to house those funds as well. So if you're doing that bank account method, open up yet another bank account. But see, this is why it starts to get a little complicated, because now you're gonna have all these bank accounts open that you may not want. But if you're going that method, open up a third bank account to park that SBA money into, okay? Otherwise, on QuickBooks, we'll just, create another class. And so it's a lot easier to track it that way. But in any case, you want a bookkeeper to help you set up, track, and transfer those funds so that we're really clear about what we're spending the money on. Okay, we don't want to commingle all that together. Okay, so that's the SBA disaster loan. So let's quickly talk about this Main Street lending program. And I only have one slide on this because it's actually pretty straightforward. But this is not a new program. It was actually part of the CARES Act. It just never really got talked about because everyone was focused on the PPP. Well, now that the PPP is the funds are finally starting to release, people are asking, well, how can I get more money? Maybe the PPP isn't enough for me, or maybe I'm looking to expand right now. Or maybe I just had a business that was bigger than the PPP, which, can happen in a lot of cases. So that's where the Main Street Lending Program came out. And the Main Street Lending Program is an SBA backed loan. It's basically, if you think of a traditional SBA loan that you get from a bank, that's what the Main Street is. It's a traditional loan, SBA backed loan that you get from a bank. It's just a lot bigger than maybe a normal SBA backed loan. Okay, that's kind of what it is. So the minimum loan that they're giving under the Main Street as of right now is $1 million. There's been talk about lowering that amount to maybe $500,000 or something, okay? But as of right now correct me if I'm wrong if that's changed, but it's $1 million. So that was the minimum loan that someone could apply for. So $1 million and up, okay? Now, in order to qualify for $1 million, you had to have a net profit essentially of at least $250,000. The way that they were calculating the loan amount was they were taking your EBITDA, which is earnings before interest, tax, and amortization. It's basically your net profit for all intents and purposes before taxes, okay? Taking that and multiplying it by 4, and then that was the loan amount. So if the minimum was $1 million, you had to have at least $250,000 in EBITDA in order to get to that million. So that's how that worked, okay? So again, they're talking about lowering that, so we'll see how that goes. But that's the minimum EBITDA, okay? The interest rate on that loan is going to be between 2.5% and 4%, and you're going to have 4 years to repay that loan, okay? So if you meet that criteria and you do need more money, please know that the Main Street Lending Program will be available to you, and you want to reach out to your lender to ask them about borrowing under the Main Street Lending Program, okay? Now, let's talk about the employee retention credit, okay? Now, the employee retention credit basically was a second thing that the CARES Act provided to help make sure that employees were employed. The caveat here was that if you could not apply for the PPP, you would want to do the employee retention credit. And there were some businesses and some organizations that could not apply for the PPP. Primarily, if you are a 501c6 nonprofit, which is like an industry organization, basically, like think your chambers of commerces, industry associations, et cetera, 501c6, you actually could not apply for the PPP. So the employee retention credit is where you wanted to put your attention. And there are a couple of other ones that couldn't apply either. So if you happen to be able to apply for the employee retention credit, you want to make sure that you're taking advantage of this, okay? And what you can get is a 50% credit of your wages up to $5,000 per employee. Again, the criteria, you had to meet 2 criteria. 1, you couldn't take the PPP loan, okay? And 2, you had to, your business had to have been impacted by the coronavirus, either through a mandatory government closure. So if you're a restaurant and your doors had to close and you didn't take the PPP, then you could take the employee retention credit. Or if you had a loss of revenue year over year, then you could take the employee retention credit, okay? So if this is you, what you want to do is call your payroll provider and tell them that you want to apply for the credit, okay? Then what they're going to do is they will go ahead and put all the information through on your payroll report. Your payroll report will then show 0, okay? And I'll show you what that looks like in a second, okay? Your payroll tax return will then show negative, which again, I'll show you. And then what's going to happen is that you're going to get a refund of that overpayment. So here's what it looks like. This is what you want to look for if you take the employee retention credit, okay? If you look at your payroll journal, what you're going to see is the employer taxes section. The Social Security tax is going to say 0 for the employer tax. Now, notice that the employee tax still has an amount there because the employee still has to pay their Social Security. But you as the employer, you're going to not pay anything. So you want to make sure that that is reduced to 0. That's how you know that you're starting to take advantage of this credit, okay? That's gonna be some of the money that you're gonna get. The rest of it is going to now go on your tax return. So here's a 941, that's your quarterly payroll tax return, okay? And what we're gonna see, now I don't know this for sure because the IRS actually has not come out with the new form that's gonna have this information. So this is what I think it's gonna look like basically. So I think that there's gonna be a line that shows up there that's gonna say something like COVID-19 relief or something like that, okay? That's where you're gonna put the rest of the wages that you claim as a credit, you're gonna put a negative amount there. And then what that's gonna do is then it's gonna say, well, you had a negative tax, you paid some taxes, but ultimately you had an overall negative amount of tax. That's going to trigger a refund. You basically overpaid your taxes and now you're going to get a refund of the overpayment. So that's how basically it's going to work, okay? Now, you do have to wait until the end of the quarter to file the 941. So if you don't want to wait until the end of the quarter, which I get, you can actually expedite the refund by filing what's called Form 7200. So this is a new form, 7200, that the IRS came out to. You're going to fill out this form to expedite that refund and get your money now, okay? So that is the employee retention credit. If for some reason you can't apply for the PPP, then please keep this in mind because you may be able to take advantage of this one, okay? So let's talk about the federal sick and family leave. So if you remember, as part of the CARES Act, I'm sorry, this is actually predated the CARES Act. The first act, the Families First Coronavirus Response Act, something like that. They created the federal sick and family leave to help employees who ended up getting sick with the coronavirus, or their family members got sick, or if their children could not go to school, then they were able to get some money. Because remember, before this, if you got sick or had to take family leave, you could take it, you just didn't get paid for it. There was no law that said that you had to get paid. The federal sick and family leave has cured that, basically, because now you can get paid. Okay, so if you take sick leave, employees can take up to 2 weeks of sick leave, or 80 hours of and get paid 100% of their normal pay, up to $511 per day. For family leave, they can take 10 weeks of family leave, 400 hours, at 67% of their normal pay. Okay, so you do get a little bit there that employees can take advantage of. So what does it mean to be affected by coronavirus? Okay, sick leave means anyone told to quarantine, showing symptoms, exposed to the virus, or trying to get preventative care. It's a pretty broad definition. Family leave, of course, means if I'm taking care of someone who's sick, or if I'm taking care of a child whose school or family is closed due to the coronavirus. Okay, so if someone falls into that situation, then they could take advantage of this. By the way, this also applies if you don't have any employees, if it's just you working in your business, then you can also apply for these credits as well. So keep that in mind. I do have a whole other webinar that goes into all the details of these programs, by the way. So I'm just trying to do a quick overview because there's a lot more here. But just know that you can take advantage of this. Okay, so how does it work? So as the business, you're going to keep paying your employees during that leave. Okay, so during sick leave, you're going to keep paying them the normal rate. For family leave, you're going to pay them at 67% of their pay. Okay, and then you're going to apply for a reimbursement via a payroll tax credit. So again, you're going to ask your payroll provider to help you apply for this to make sure you take advantage of it. So in our system, we use a program called Gusto, or Gusto, depending on how you want to say it. Tomato, tomato, right? This is an example of what it actually looks like in our system. I took a screenshot here, okay? This is for me, right? It's me. So what it shows is it literally just asked me right there as I process payroll, hey, does this employee have any type of emergency leave that they want to take? Okay, do they want to take paid sick leave? And if I click that down arrow, it would actually give me an option of sick leave versus family leave. Okay, so your payroll system should prompt you to enter these things. Once I enter in that amount, now I'm going to look at my payroll report and I'm going to see two things. So you always want to double check this. Number one, on the payroll report under earnings, I'm going to see federal sick leave now show up on the payroll report. That is your trigger to know that you're taking advantage of this. The second thing is, again, those employer taxes, that Social Security tax is going to show a 0. Okay, so if I see those two things, now I know that I am taking advantage of the federal sick and family leave. Okay, and again, I'm going to go to my 941. A negative amount is going to show up on the 941, and that's going to trigger a refund of any overpayment. And of course, I can file Form 7200 to get that expedited. Okay, now, what if you did not have any employees, if you are just a sole owner? Okay, what you're going to do is, because you don't have a payroll system, you're going to apply for the tax credit on your Form 1040. So you're going to ask your tax person, whoever does your taxes, to file for this credit on your personal income tax return, okay, that you file in April of next year. Again, that's a long time from now, so you probably want to file Form 7200 to make sure that you get that expedited, okay? Now, really important, more bookkeeping here, okay? You have to track the hours that people are taking advantage of. So if they've taken 2 weeks of sick leave and 10 weeks of family leave, you want to make sure that you are aware when they've exhausted these hours, so you can let them know, give them a heads up that, hey, you've exhausted your hours, or you, if it's yourself, that you know when you've exhausted your hours, okay? So you really want to track your PTO balances to know when that leave is exhausted. Again, have your payroll system help it track it, or have your bookkeeper help you track these numbers so that you know exactly when this stuff is going to be exhausted, all right? All right, so let's talk about payroll tax deferral. You get even more stuff here, okay? So your payroll tax deferral, okay? what this means, as a reminder, is that everyone can apply for this if you have employees, okay? So again, you have to pay your employer portion of Social Security tax. So anything you pay your employees, they pay their portion of Social Security tax, you pay your portion of Social Security tax. You still have to pay your portion of Social Security tax. However, you don't have to pay that amount right away. You, as part of the CARES Act, you can delay that payment. You can hold on to that money, bank it, and then pay it off at a later date, okay? So for the rest of the year, you can bank all that money, and whatever balance you have left over at the end of the year, you pay half of it by 2021 and the rest of it by 2022, okay? Okay, now the key there is that once you get the PPP loan forgiven, you cannot keep doing this, okay? So I'm gonna talk about that and show you what that means. So in order to take advantage of this, again, you're gonna go to your payroll system, and it's gonna prompt you in our payroll system. It literally pops up right when you start payroll, and it says, hey, do you wanna take advantage of the Social Security tax? And then we just click this little button that says, yes, go ahead. And then it takes us to this thing, this other box that says, great, you're now deferring your Social Security tax under the CARES Act. And that's it. That's all you have to do to turn it on. Again, we're going to look at our payroll report. Now, it's going to be different here. Under the employer taxes, we're going to look at the Social Security tax. That will not be zero. Okay, for this one, it will not be zero because you are still paying Social Security tax. You're still assessed the tax. You're just not going to pay it right away. Okay, so you're still going to see an amount there for the tax. What is going to be different though is the deduction you get from your bank account. So when you see employer cost, your total cost, which includes your taxes, right now it shows $11,600, but we're not going to actually see that deduction come out of our bank account. We're going to see that $11,600 minus that Social Security tax. That's what's actually going to come out of the bank account. Okay, that's how you know it's working. So you want to double check that. Now, the amount that's left over, that $619, you do still owe it. So guess what? You got to make sure that this now shows up on your balance sheet as a debt because you're going to start accumulating a debt that you have to pay off. So you want to make sure that on your balance sheet now, you start accounting for this because you want to make sure you know exactly how much money you're going to end up owing so that you can plan your cash flow down the road as this starts coming due. So very important, don't forget to set up the liability, okay? Now, if you use QuickBooks and Gusto, they actually sync together. So this will automatically be made for you. And again, you just wanna ask your bookkeeper to help you set up that sync, and it will automatically do all the journal entries for you. So you don't have to ever worry about doing a journal entry again. Just make sure that you are tracking this, okay? And again, you wanna make sure that you pay your balance due on time. So half of that amount, whatever that amount is, finally, that's in your balance sheet, half of it you need to pay by December 31st, 2021, and the other half by 2022, okay? So make sure you keep these dates in mind. Don't forget them because otherwise you'll incur a penalty, all right? Now, once you get the PPP forgiven, then you have to turn off the deferral. Now, it's not when you get the PPP money, okay? It's not when the PPP period is done, that 8 weeks is done. Only when you get the actual notice of forgiveness do you have to turn off the deferral. Up until then, keep deferring the money. Once you get the notice of deferral, you're going to need to turn off this deferral. So again, you need to talk to your payroll person, or if you use Gusto, you're going to just click the stop deferring tax button, okay? But you just need to make sure that that happens, okay? That's the payroll tax deferral. So real quick, a couple other notes on other funding that's available to you. Just keep in mind that the federal government money, these tax credits, and the PPP and whatnot, this is not all the money that's available to you, okay? There are other sources of funding that, that are from your state and county, and it doesn't all come in the form of loans and grants, okay? We're seeing some states and counties come out with programs that also help you do other things like relieve you of taxes. Like in DC, you can get a sales tax deferral, okay? You have tenant protection, so if you're renting out a commercial space, you have some protection there against paying rent and getting evicted. Compliance deferment, so if you have a business license coming up to renew or a report to be filed, maybe you can get a deferment of that. So just keep in mind, you want to double check your state and your county to see what other programs are available to you, okay? Private programs are also out there. So Facebook has a grant program out there that you can apply for. Goldman Sachs has something. The U.S. Chamber of Commerce has something, okay? So there are other programs out there that you may want to apply for. And if you are looking for expansion capital, then you can look for CDFIs, Community Development Financial Institutions, which can help you get some additional expansion capital during this time, maybe on top of that Main Street Lending Program, okay? Key point here is that there is other money out there. So just make sure that you check the criteria of all those programs. Make sure that you abide by the rules. Again, ask your bookkeeper or accountant if you're not sure if there are any rules around that, okay? The last piece I'm going to touch on real quick, and then we'll get to questions, is around management. Okay, so please, please, please remember that every program I just mentioned is just a Band-Aid for you. It's meant to keep you moving along for 2 to 3 months tops, okay? You really do have to think about how you're going to grow your way out of this situation and generate more money, okay? The way that we do that is by diversifying your revenue stream. So as you use this money, okay, these PPP monies, SBA monies, all this stuff, use the money to create new revenue streams. We've been getting a lot of questions around, well, what do I do with my employees? I'm going to start paying them and they're just going to sit there. No, don't let them sit idle. Help them, have them help you think of new ways to generate revenue. How can you pivot your business, your resources to generate something new so you can continue making money during this period of time? Put them to work, okay? So that's the whole point of this, is that no one is sitting idle, okay? Also, make sure you're updating your financial and cash forecast on a regular basis. You want to make sure when you get that money in the door, you know how much cash you have coming in, okay? You know how much runway you have. If you make any changes to your business, make sure that you're updating your financial forecast so you understand how that's going to affect your cash flow and whatnot. If you rehire employees, how much cash do you have left? If you create new sales streams, what is that going to look like? If you cut expenses, how is that going to look as I roll my business out over the next few weeks and months, okay? Certainly, as you start to come up to loan repayments, how is that going to affect your cash flow? You really, really, really need to be on top of that so you understand exactly how your business is going to move through this period of time. That is incredibly important, okay? At the end of the day, this is all about strategy, strategy, strategy. Just make sure that you are thinking strategy here when you use this money, okay? So to help you out, we are offering a few different things. We are providing free disaster planning sessions. So if you do need help thinking about how to strategize during this period of time, if you haven't gotten the loans and still need help getting the loans, we'll help you with that. And we are also offering some bookkeeping support, okay? So if you do need help with some of the bookkeeping around all this stuff, please feel free to reach out to us, schedule a consultation, cfoservicesgroup.com/COVID-19, and we are more than happy to help you completely pro bono, free of charge right now, okay, as our way of giving back to the community. cfoservicesgroup.com/COVID-19. And with that, I will turn it back over to Lisa for questions.
Thank you so much, Manny. That was great. I have a lot of notes here. So
it's a lot of information, isn't it?
It is actually. So I just want to remind everyone, if you have a question, please type it into the Q&A section, and we'll make sure that we can answer your question. But Manny, I do have one question for you. Towards the end, you touched on additional sources for funding. Yes. And tax options. Is there a universal place? Because we have people on this webinar from all across the country. Is there a place, especially in terms of tax credits maybe, that we can direct them to?
Sure, it's google.com. No, that's honestly, that's what we've been doing. Literally, we just kind of, what's your state, county? So again, I would do a search for your state, your county, and your city. Definitely do those three. I would also look if you belong to any industry organization. So if you belong to a particular industry, like the events industry, restaurant industry, look to see what your industry may be providing. But Google is your best friend right now because there are so many out there. I have yet to see a place where they're all aggregated. But yeah, we just been doing searches and kind of just figuring out, you know, okay, what's around right now.
Okay, great.
Yeah.
Okay, so we have one question here. Oh my, okay, so Victoria says, what if we had COVID-19 and have been sick for 7 weeks?
Mm.
Is it just the 2 weeks we can apply?
Yeah, that's good. And sorry, yeah, sorry you got sick. Hopefully you're feeling better. Yes, it's just 2 weeks of sick leave. And then, so it's actually 12 weeks of family leave. It's just, it's recommended that you take 2 weeks of sick leave first and then 10 weeks of family leave. But yeah, the sick leave portion is only 2 weeks. Family leave is the rest of it, the other 10 weeks. That being said, this is kind of all like self, certification. So I don't know how they would show otherwise, but yeah, it's 2 weeks of sick leave.
Okay.
Yeah.
And then we have another question. What if you did not know about the limit of owner compensation at first? So you may have depleted the maximum 75% before 8 weeks. This is for a sole proprietor, no other employees. Basically, do you have to wait the whole 8 weeks or can you set up the funds in 4 weeks?
Well, so yeah, you just have to spend it within 8 weeks. It doesn't have to go throughout the whole 8 weeks. It's just, but the timer does start from the day you get the money. So this is actually an important point. If you spent the money before, any money you spent before you got the PPP does not count. Okay, it has to be that money basically. Okay, so but once you get the money, I mean, you can spend it all in one day, I guess, theoretically, and you'll be okay. But you are subject to the limits of what your tax return said last year. So keep that in mind. So you can't just all of a sudden pay yourself $100,000 if last year you only made $10,000. Okay, that's not going to fly. So you are subject to that still, and you can only pay yourself 2 months worth of the profit you made last year. Okay, so keep that in mind.
Okay.
Hopefully that answered the question. Yeah.
I think so. So, and thanks, Victoria, for letting us know that you're feeling better.
Oh, good.
And also, I just wanted to let all of the attendees know that in the chat section, I have posted a link to 3C's funding assistance and relief page. So feel free to visit our site as well, connectedcouncil.org, and you can also find those resources there.
I guess, should I add the link to our free stuff? I guess
Yeah.
I'll put the, yeah.
We'll make sure we add all of that on there.
Oh,
There you go. Okay, so we've got another question here. If Main Street lending program minimum is lowered to 500,000, what is the net profit needed to qualify for 500?
Oh, okay. So it's 4 times. So that's what it is. So it'd be 125,000 then. So if they do lower it to 500,000, it'd be 125,000 because that times 4 is 500,000. Okay. I will mention one other thing about the Main Street, which I failed to mention. If you have any debt, then the requirement is actually more. So that 125,000, let's say, or the 250,000 as of right now, of earnings before interest, tax, and amortization. That is assuming you don't have any debt, okay? Any like loans basically out there. If you do, they actually are increasing that threshold. I'm not sure how much. So that's something you want to ask your lender, basically your bank, let's say, if you do want to get this, what exactly that criteria is ultimately going to look like.
Okay.
Yeah.
Well, wow, we've got quite a few questions. So can an S Corp business owner who takes wages as a W-2 employee also take owner compensation in the form of a shareholder distribution from the S Corp under the PPP?
Great question. No, you cannot. You are an employee. So yeah, you can only use your payroll. Okay. And when you applied for the PPP, you were not supposed to use shareholder distributions as an S Corp. You were not supposed to use that in the calculation of the PPP, by the way. It was only wages, W-2 wages. Now, if you're an LLC, sole proprietorship partnership, that's different because you don't pay yourself through payroll. But yeah, as a corporation, you do got to pay yourself through payroll. Remember, you're supposed to pay yourself a reasonable salary. Okay.
Yes. Okay, so is rent considered let's say for May and June, if you receive the PPP funds in May, or can it go for the 2 months that you've been working remotely at home and deferring office rent?
Could you repeat that?
Okay.
Yeah.
Is rent considered, I'm going to read it exactly. Is rent considered,
Okay.
let's say May and June, if you receive the PPP funds in May? Or can it go for the 2 months we have been working remotely at home and deferring our office rent?
Oh, I see. Okay, yeah. So you weren't supposed to, again, you can't spend the money. So this is kind of, and I'm going to answer this with any expense, okay? Because I've gotten a similar question from the way I've been reading this, okay? And I don't know if this question has been fully answered yet, but you were supposed to, you can't accumulate debt for the past month or two and then all of a sudden pay it all with this money. Okay, so that's what it sounds like. It's like, well, I didn't pay rent the last 2 months. Can I use this money now this month to pay the past due balance? The answer is no, you can't pay past debt with the PPP. Okay, so you can only pay your current rent with the PPP money. That's all that counts. And if this money gets audited, I mean, I'm not sure what that's going to look like, but if it does get audited, then that is definitely something that an auditor would quickly pick up on. I can tell you, I've done audits before. It's pretty apparent when someone does that. So you don't want to, you don't want to do that. You just want to pay your current expenses with the PPP. So I think that answered that question. Yeah.
Okay. So how is transportation defined? Gas mileage, public transportation, et cetera.
Yeah, that's a great question. So I think there's still a little bit of ambiguity around that, but basically it's gas, public transportation, Ubers, kind of stuff like that. So anything that's required to get you from point A to point B. I don't know about vehicle payments. From what I've read, it doesn't look like that's included in transportation, by the way. So if you want to use your money for that, just look it up or wait a little bit to see if there's further guidance on that.
Okay, and I think we've got time for maybe one more.
Mm-hmm.
So if our PPP loan 8 weeks ends before June 30th, do we still have until June 30th to restore employees for loan forgiveness purposes? And do they have to be employed for 1 day to count as full forgiveness?
So remember that, that's a great question. You have to think about the totality of all the criteria though, okay? So again, it's not only what am I authorized to spend the money on, but my employee count and those percentages. So if you wait too long to rehire, you're probably not going to meet that percentage criteria. Okay, you're going to have a hard time meeting that. Also, if you, I totally forgot my second point, but anyway, you're going to have a hard time meeting that criteria around that. So just keep that in mind, how those all play off of each other. Okay. The other point was about the wage reduction. Also, you need to look at your payroll. Okay. And during that 8-week period of time, remember that your overall wages, the overall payroll spend cannot decrease by more than 25% as well. So not only do you have a payroll threshold that you have to meet for the money that you spend, but also there's a wage criteria that cannot dip below. So again, if you look at your payroll over that period and it's more than 25% less than it was a few months ago, then you're also not going to get the forgiveness. Okay, so that's why you have to be careful. So technically, yeah, you can wait, but are you going to meet the other criteria? If you do, probably not. Okay, so you really just want to make sure you hire right away, just to make sure that you do maximize all this. Okay.
Okay. And I know we're running out of time here, but this one is one I think applies to quite a few people. So I'm going to try to squeeze this in. If
Okay.
2 employees are married and have a child whose school was canceled, can they both apply for the 12 weeks of family leave credit? And if so, can they take the same 12 weeks or would they need to be different?
Oh, I don't know, actually. That's interesting. Well, I guess yeah, well, I go back to if it's a corporation and you're both employees, well, yeah, every employee can take the family leave. If it's a partnership, I mean, every partner in the business is allowed to take the leave. So, I mean, I would assume that it would just be the same with the family leave. I haven't heard otherwise, and I don't see why you wouldn't be able to. So, yeah, I think you would be able to both take it. Yeah,
Okay,
yeah.
wonderful. Well, I wanted to thank everyone for their questions. These have been great. I know I've seen quite a few people who are pinging asking if we will replay this webinar. Yes, we will. We will post it along with the slide presentation so that you can review it later. On the screen here, please visit our website, connectedcouncil.org. Take advantage of all of our resources. We have a coronavirus page. We have a resource funding page. There's quite a bit to help small businesses. And please take advantage of Manny and CFO Services Group and their resources that they are providing to you during this time as they give back to the community to help small businesses. Manny, thank you so much for your time. We
Sure.
appreciate you being here.
Thanks for
Thank you
having me.
all for joining us, and have a wonderful afternoon, everyone.